And welcome to the Mortgage Coach Tuesday interview. My name is Dave Savage, CEO of Mortgage Coach. It's always an honor to lead this call. So proud of the top mortgage professionals that are part of the community and love all the innovation that Mortgage Coach leaders are implementing. It's just crazy. This month has been an amazing month of Tuesday calls. The ideas coming in from everybody have just been amazing. If you do know of another guest that you'd like me to interview, or if you think what you're doing and how you're doing it is something we should be sharing in these Tuesday calls, let me know. So this morning I have Mr. Josh Mettle. Josh, welcome to the Tuesday call. It's great to have you, my friend.
Grateful to be here, brother.
Well, in preparation for this call, I was kind of going back and looking at all the times that you and I have created content and leadership together, and it's quite a collection, my friend. I'll get into that in a little more detail in just a minute, but you are just an amazing teacher, brother. So let me kick things up. Oh, go ahead, Josh.
I was just going to say, you've got a picture of me with short hair there, so this must go back at least a few years. This is impressive.
Yeah, well, I've got all kinds of pictures of you. But that's the one. If you want to get it, you want us to use a different picture next time, get it over.
No, man, it's way more gray. I'm going to go with that one. I like it.
All right, great. So if you missed last week's call, and if you are working with agents that are using Facebook, or you're working with agents that want to use Facebook for sales and marketing, last week's call was important. Tina Bellevue out of Baltimore, a Keller Williams agent that sold 143 homes last year as a team. And she's a leader. So, in addition to that, she's leading a top, group in that marketplace. I just don't think there's maybe very few agents in the country that are using Facebook for sales and marketing as well as she's done. And not only did she get in and just, with total transparency, share her strategy, she went through the posts that were getting the most engagement. She went through the posts that are helping her sell the most homes. So we were talking about, okay, how are you building your brand? How are you using Facebook? And which posts are actually making you money and actually driving business? And she just brought it. So make sure you check out that video if that's important. If you're not on Facebook yourself, you don't want to work with agents that use Facebook, then not a good call. But if you do, check it out. Also want to shine a light on the week before that, I interviewed Rick Shearer out of the Boston market doing $100 million a year in production. And he talked about how he's doing realtor mastermind events. And I thought this was incredible. He's inviting agents. In this particular group, this was one of his first agent masterminds. Some of these other ones were like focused on listing agents. But he's actually putting great agents together in a room for half a day, bringing them together, harvesting ideas, and it's just a centerpiece to his business. I thought it was super smart. He broke down how he puts them together, how he markets them, really how he implements this mastermind strategy with real estate agents. And I just thought, if you missed that, check it out. By the way, Josh, have you ever thought about doing a mastermind event like this, or do you know anybody in your market that's doing anything like this?
I've done it individually with my realtor partners, but I haven't done it, to kind of leverage the collective intelligence of the group. And I love that picture right there. I think you could bring a lot of value to. Everybody brings one idea how to get more listings or how to harvest listings and get a bunch of realtors in the same room. I don't think you'd have any trouble getting realtors there, and I think it'd be a 10. So I'm swiping and deploying. I'm taking notes.
Yeah, right. It was good. So check it out. Also, I loved how Rick is visualizing his goals. Their goals for 2017 is to serve 400 families. He put something up in the office, created something. We're gonna track his success, but I thought it was a clever and smart way to get the whole team around the goal for the year. And then the last reminder from that, Rick has this, pre-approval handbook, and within it, he's done a nice job of promoting the total cost analysis. So at the front end of the process, he's like, hey, this is my process. His agents know it. Everybody knows it. and I thought he did a nice job of promoting and positioning Mortgage Coach Total Cost Analysis within that. So I did put a call out, and if anybody has something like this, send me a picture. Just take a picture of it and email it to me at Dave at Mortgage Coach. We're trying to collect how different loan officers are positioning the total cost analysis in their marketing. And I would love any examples that you guys have out there. So again, great call. Make sure you check it out. And my last reminder before we get into the call is Dan Rawich was on that call with me, with Rick, did a great job, provided kind of a mini update. Well, Dan, next Wednesday, 10 o'clock Pacific, is putting together his 2017 market predictions. So what does he think rates are going to do, when and why, and everything that Dan thinks is happening in 2007 from a market perspective, he's going to unpack next Wednesday at 10 o'clock Pacific. Don't miss that call. It's going to be great insight. It's going to be baseline knowledge that I think every mortgage coach should have. So check us out next Wednesday at 10 o'clock. So let me tee up Josh. Josh and I started talking about this call early in the year. I wanted to have Josh, before spring home buying season, come in because he's such a great teacher and he's done such a great job of how he leverages Mortgage Coach in the marketplace. Josh, I don't think you realize just how many calls we've done together. I'm going to pull up. I'm going into our I don't know, what do you call it? Our YouTube page. And I don't know if you realize it, but it's not like one. Like this call we did in 2014, it's been watched almost over 2,000 times. I mean, check that out, over 2,000 times. You did an update of that call, going from price to advice with Josh Mettle. Awesome call. And then you just continue to add value. So look at this. We've got over 14 training videos. They all have to do with sales training. And so anyways, I thought you created such great content. I created a playlist called the Josh Mettle Sales Training in the Mortgage Coach channel. The only other person I've done that with is Jeremy Forcier, because I've interviewed him so much and his content is just so important from a training perspective. So check it out, Josh. You have your own playlist in the Mortgage Coach training platform now. How do you like that, my brother?
I'm adding it to my onboarding checklist for new loan officers. I love this. Thank you. Super cool.
No problem. So, and for anybody who's new to the call and you don't even know that we have these playlists, we've got a playlist with scripts, 22 videos. I've started doing these Skype interviews, 5 videos. I'm doing interviews, what I call real world scripts, realtor strategies. So if you just want to go deep on realtor strategies, we've got 33 videos. So check it out. So let's get into the meat of the call, Josh. It is spring home buying season. It was spring forward this weekend. Why don't you just share from a kind of high level perspective how you're preparing yourself, your team, and your agents. One thing before you get into that strategy, just in case there's anyone on the call that doesn't know who you are or what market you serve, if you could just give us a high level on the market you serve, the production last year, and your goals for 2017.
Certainly. So last year we closed just over 600 transactions. Our goal this year is to serve 1,000 clients. We have a long ways to go, and that'll be the crux of our call today. We're based out of Salt Lake City, but we do originate in over 40 states, and we have a bit of a different model. Our model is consumer direct, so we have a bunch of websites. We do a bunch of stuff through LinkedIn and Facebook and advertising on different blogs and other various websites that bring in consumer direct leads. So my job on the team is to, along with Raylene Harker, my marketing gal, is to bring in opportunities through the front door, clients that we can serve, set direction, and I also do a little bit of originating as well.
Fantastic. So what's your mindset? What are you doing to prepare for spring home buying season over the next couple months?
Well, I think we should set the stage because those who have been on this Tuesday interview before probably have a similar feeling that when you come on this, you have to bring some value. And so when you follow in the footsteps of Darren Hardy and Simon Sinek and the other mortgage superstars that you just mentioned that have been on this call, the first thing that tends to happen is your ego kind of has to cowboy up a little bit. And I noticed myself doing that after the invitation. And you start looking back at what you have done in the past in 2016. But I think for this call, what we need to focus on is what's going on in the market right now. And when I say right now, I mean within the last 90 days since the election, because I think there is a shift that has started to happen. And if there's one message that I hope everybody writes down is that this ain't 2016. We are in 2017. The market has started to shift. Rates are going up. Inventory is a little bit narrower. And if your numbers are off, like mine are, my numbers are off in 2017. It's time for us to take a real honest reflection, a real honest look in the mirror and say, what's working? What's not working? What do we need to eliminate? What do we need to accentuate? And how can we thrive in 2017? I have a group of originators. I'll call them my mastermind friends. And we had a call led by my coach last week. And to my surprise, every person on the call, and these are all mega producers from DC to Colorado to Salt Lake to Southern California, every person on the call mentioned that they had one of the slowest Januaries and Februaries that they've had in a long time. And you may not be feeling that. You may be the exception to the rule. But as I tested my network and started sending out emails asking how people were doing, we're getting a lot of feedback that there is increased competition, compressed margins, big banks trying to buy the market. These are all things that we're focusing or that we should be focusing on as present time threats to our goals for 2017. So I think, Dave, we've got some slides that we're going to jump into from Steve Hardy to kind of set the pace of where the market is telling us we're headed. But before we go there, this is a great slide. This is one of my favorite sayings from Jocko Willink. If you guys haven't read Extreme Ownership, you should definitely do that. Get the audio version, right, Dave?
I read the book and the audio, but if I had to do one, I'd do the audio book because Leif Babin and Jocko read it, and it's awesome insight and incredibly entertaining.
Incredibly entertaining. And it's amazing how intelligent those guys are. They are both incredibly tactful thinkers. They're very insightful. But one of Jocko's best quotes in my mind is "Stay humble or get humbled." And I think there's a bunch of us looking at 2016's numbers and looking at our W-2s and looking at our results and saying we're doing pretty good. But if we don't realize that 2016 was 2016 and this isn't 2016, this is 2017, we need to look at what it's going to take to reproduce those gains in 2017. So that's what we hope to do a little bit today.
Love it. By the way, you mentioned your coach. Who is your coach nowadays?
Mr. Todd Buxban.
Right on. Couldn't have a better coach than Todd. I would have loved to have listened in on that call, but I know we're going to get to some of the things that you learned. So one of the things I know you use Steve Harney and you subscribe to Bridge Builders. If you wouldn't mind walking us through what you think are some of the key insights in the market. And folks, when you listen to this, I want you to listen to this call in kind of three parts. Part of it is what is Josh doing to prepare himself as a leader? And he already kind of talked about that. He's clear on the facts. He's focused on staying humble and realizing he needs to reinvent himself. He's communicating with his team. He's educating his team. I mean, I'm always impressed by that, Josh. I know when you listened to the interview I did with Darren Hardy, he literally forwarded me, out of, 15 takeaways from that call I did with Darren. You distilled it down to, here's the 4 things that I'm going to focus on, and I'm meeting with my team for an offsite in next week to go down on this. So he's getting his team prepared, and then what you'll find out during this interview, he's getting his partners prepared. He's bringing leadership to all the partners that provide him with referrals. to maximize spring home buying season. So Josh, let's walk through some insights. I'll be your wingman, you know, and I'll just go to the slide that you want me to be on as you're talking.
Yeah, and let me set these slides up just a little bit. I'm reading a great book right now called Legacy. It's what the All Blacks rugby team can teach us about business and life. And there was a couple of quotes as I was preparing for our call today that really stuck with me. And one of them is by our friend Charles Darwin, who says, "It's not the strongest nor the most intelligent species that survives. It's the species that is most responsive to change." And I think that ties into the previous quote by Jocko. Before you can be responsive to change, you have to be humble enough to realize what worked yesterday may not work today. If we don't want to be Blockbuster Video and Kodak, we better be honest with ourselves and what is our production in 2017 and what are the facts telling us? What is the data that Steve Harney so perfectly presents us? What can we do with that in present time? So Steve Harney, those of you who don't know him, Keeping Current Matters, KCM blog, he does a monthly slideshow and video presentation that goes over basically all of the different news reports about real estate, mortgage across the country, and he packs it into about a 30-minute session with a bunch of slides that you can reproduce. And these were a few, as I was looking through that presentation this morning, that stuck out to me and kind of helped me form my thought process on what the shift is that we're seeing right now. Why are top producers across the country telling me that their numbers are off? Why am I losing deals that I used to not lose? I used to be able to film a TCA, big smile, brush my teeth, put on my double Windsor, and I was converting those loans. Why is my conversion slipping just a little bit? So Steve puts together some pieces of the puzzle that can help us figure out maybe what's going on. So this slide, Dave, just shows where we changed on November 8th with the election and how interest rates started to shoot up. And you know, most forecasts show 4.5% being the level of interest rates, but I wouldn't be surprised if they went higher. I wouldn't be surprised if we hit 5%. And we should prepare for that. We should prepare for worst case. This slide gives me an insight on where's my edge. If my edge isn't rate, if my edge isn't fee, then where can my edge be? And when you look at this number climbing from last year, we're 44 days in March. We went through the whole summer buying season with only 46 days, average days to close a loan. Now all of a sudden, November, December, January, we jumped into 51 days. Some of that might be the holiday, but why would less loan volume, potentially with higher rates and less refinance, why would that have longer close dates? So that's something that I'm thinking about as I lay out a plan for this year. Okay, so let's see what's going on with inventory. Inventory starting to trend down, and you can see that inventory has been contracting as we've moved through this last year, and its contraction continues through the winter season, contraction inventory losses. All right, this is one of the most powerful slides. I mean, this is such great stuff to share with your realtors and to share with your teams and to help develop strategies for this year. But we're down to a 3.6-month supply of homes nationally. And so here's the three pieces that I'm pulling out of this data so far. Rates have spiked. My colleagues that are high producers are starting to slow down the number of transactions they're doing. They're seeing margins compress. We can get into that a little later, why that might be. We're seeing that as an industry, it's taking longer to close loans, and there's less inventory available for our realtors and buyers to go after. All of these give me fodder for a strategy for 2017. Next, sir. All right, look at this in regards to 2 years. We're at the lowest inventory levels we've been in 2 years. By the way, yesterday, we took to the highest mortgage rates we've seen in 3 years. All of this points to a little bit of a shift in the marketplace. Jerry Keller hasn't written his new book yet, and maybe the shift isn't going to be that big, but certainly there is a bit of a shift going on if you look at the data, the real-time data. What do we got next, Dave?
Sorry about that, by the way, everybody. We're getting so many requests for these slides. We are going to push those up into the GoToWebinar handout section. So in about 5 or so minutes, these slides will be up there for you.
Yeah, and pay the $50 a month. Steve Harney deserves it, and he does a lot of hard work. And these slides can be downloaded right from his monthly report. You can send these to your realtors and your clients. Fantastic information. All right.
And real quick, also we're gonna put a link to Bridge Builders in chat. So if you do want to subscribe to Steve's monthly program, which I cannot recommend enough. There is no better insight in the market for mortgage professionals to be smart so that they can, 1, make good decisions, and 2, be great leaders to agents and buyers. So we will put a link to that in chat, and the slides will be uploaded. And Steve did give these to us and gave us permission to share them today, so a great gift from Bridge Builders. Anyways, go ahead, Josh.
No, hey, one last plug for Steve Harney, because I really think this is that valuable that if we did nothing else but plug Steve Harney and come up with some current data, I think it'd be worth the call. But, you know, Steve is not a real estate evangelist. He doesn't just think, you know, he's not one of those guys that always says you should buy real estate. Steve kind of got his foot in the door on the national kind of media awareness when he called the crash to the 2008 crash. And he was looking at 2 indicators which led him to put out a report and get on national news and say that the real estate market was going to soften. And he was looking at number of months inventory, and I believe at that time Steve said that there was 11 or 12 months worth of inventory, and he was looking at the delinquency notices. And he was noticing an increase, a steady increase on the 30, 60, 90, 120-day NODs filed, and he's saying, wait a minute, delinquency's going up, banks are going to pull back capital, they're going to start restricting the capital that's going to hit the market, and we already have 11 or 12 months supply, there's going to be a crash. And he was one of the first guys to call that, and that's one of the reasons why I'm such a fan of his. He doesn't just say when the times are good, he shoots it straight. So, all right. Going back to 2011, guys, look where we're at. If you take your eyes all the way to the right to where it says January 2017, these are our inventory levels, and we have not seen these levels in the last 6 years. This is the lowest level of inventory, and of course we know going back before that, it was probably clear back, I don't know, a long time before that since we've seen these kind of low inventories. Let's look at the next one. Can you click the next one for me, Dave?
Yeah, sorry, it just all right, there you go. Sorry, it took me a second.
Okay, so we're starting to get an idea what's going on with inventory. We're starting to get an idea what's going on with interest rates. We're starting to get an idea of how long it takes nationally to close homes. We've got some ideas brewing. Let's look at the cost of renting versus buying. This is another great one to share with clients and to share with your realtor friends. Percentage of income needed to afford the medium rate historically has been about 25%. That's expanded to 29%. So it costs more to rent today than it has historically. And percentage of income needed to afford the medium home is now only 15.8% compared to historically 21%. So there's been a large push into the renter pool, and it's probable that at some point that rental pool is going to come back on and be buyers. These are all things that are going to continue to feed the demand on the real estate side and push prices higher. But it's not going to help us alleviate this inventory issue in the near term. But another piece to be making your clients and realtors aware of. Let's kick the next one. Okay, median rent. So what's going on with rent? Steep inclines up to over $850 a month as an average. That may not sound like a lot if you are in San Francisco, but I'm telling you, in Salt Lake City, Utah, or in Pocatello, Idaho, and across many parts of the country, $850 a month in rent is a decent house. And this trajectory is a great thing to show those people who are making those decisions Should I rent for the next 5 years or should I buy? This is what they need to see, that this is going to continue to increase. Go to the next one, Dave.
Well, we are through the insights, and now it's time for a little strategy.
Yeah, do you want me to kick off kind of the my big takeaway from this and how we're employing strategy, or do you want to jump into what Danny's doing?
Well, let's do a quick synopsis on what Danny's doing. So, folks, this is a video I recorded just a couple days ago, and Danny Hirani and the Gaylord Hansen team are one of the biggest teams in the country, in terms of their production level. Again, someone else I've interviewed countless times, some of the best content in Mortgage Coach, and inventory is down. He's in the San Diego market, and he is partnering with agents, and then he's showing them the move up analysis, talking about how the Mortgage Coach total cost move up can be used to make a case for someone to move up, and then he's got an agent that's going back through their database, identifying 10 to 20 of their previous customers that are most likely to move up, and then they're making a pitch together. So super smart strategy. I know, Josh, in preparing for this call, you had watched this video and said, hey, Dave, let's make sure we showcase it. So I'll let you provide your color, and then we'll get into some of the things you're doing.
Well, when I finished looking at that data and I finished talking to my originator mastermind friends, what I think is starting to happen is I believe that we've had a lot of folks that have been riding the refinance bubble longer than you could imagine. And I think that those people are now out of work, and they're now entering the purchase business, and they're now our direct competition, and I believe they're cutting their margins. I think that with the Trump administration entering in, there's a good chance that the CEOs at Chase and Bank of America and Wells have decided that it might be profitable again to do mortgages because we won't get hit with hundreds of billions of dollars in fines. And I think they're compressing margins. And I'm seeing more competition on the rate side and the fee side than I can remember seeing in a very long period of time. So I need to start thinking, how do we deliver value in potentially a little bit of a different way? And how do we address the problems? And if you look at those Harney slides, what we learned from Keeping Current Matters is the number one problem is inventory. And at the same time, it's taking 50 plus days to close the average loan. So how do we capitalize on those forces at play? And what I loved about Danny's strategy was, and if you guys haven't watched that YouTube video, you definitely should. It's awesome. Danny is one of the brightest minds in mortgage, I think, around right now. And Danny talked about going back to his realtor partners that closed loans in 2010 and 2011. He felt that 6 to 7 years was about the right amount of time for a home buyer's income level to go up, for children to, for more children to come into the picture, for their lifestyle to change enough that they may be ready to move up. He then encouraged his realtors to go out and make a list of all of those clients that they would want to work with again. It might be prospective move-up buyers. And then he created a move-up total cost analysis with them. Do you have one of those, by the way, that you could just show real quick, Dave?
Yeah, should I show yours? Would that be a good one?
Sure. Yeah,
okay,
yeah.
So let's see. We've got your. Is this the move up? No, that's. Yeah, right. Okay.
Well, while you look, let me just cue up what he did. Is that okay? I'll keep that in the picture.
Yeah, go for it.
So he contacts his realtors. He says, I believe we need to get more listings, because with more listings, you're going to get more phone calls. That's more buyer leads. We can do more business together. So how about you give me your list of potential move-up buyers that you closed in 2010 and 11. They've got a bunch of equity. They may want to move. I'll calculate how much equity they might, together we'll calculate how much equity they might have from a sale, and then we'll create total cost analysis that show them what it would look like to move from $1 million home and cash out, let's say, $300,000 in equity, Now, what happens if we put that to work on $1.25 million home, or $1.5 million, or $1.75 million, or a $2 million home? Of course, he's in San Diego, so his prices, take off a zero if you're not on the coast. But he's showing them what it might look like to move to the next level of home higher. And I thought one of the beautiful things about his strategy was he's creating so the realtor does the analysis on the homeowners, he does the analysis on the total cost analysis, then he goes to the realtor's office and they film the total cost analysis or the video together with him and the realtor. And I thought it was just one of the most powerful strategies I've seen. I immediately forwarded that to my best realtor partner, and he said, "I'm on it. Phenomenal idea. I'm creating the list now."
Yeah, and so by the way, everybody, I just posted 4 different move-up analysis ranging in different marketplaces from Ohio, it's all over the country. I forwarded, we've got a lot of move-up analysis. I track this from some of the best of the best. Like here's my little spreadsheet of what I consider some of the best move-up examples are, FHA analysis, rent versus own. So I just posted some of those in chat. I pulled up Danny's. If you do not know how to do this, we're not going to spend time in this call tactically and strategically walking you through how to create a move-up analysis or a cost of waiting analysis. But every Tuesday at 9 o'clock, we do training. So if you do not know how to do one of these scenarios, come to that training call. Josh, I do want to make sure we give everybody some scripting. So we could teach them tactically how to do it. Not to mention, folks, if you go to our support page, just go to the Mortgage Coach website, go to Support Center, and type in, cost of waiting analysis. It'll pull up. For those of you on this call that are kind of wondering what's the difference between cost of waiting and move up, the cost of waiting is just something that you would provide to any buyer who's thinking like, hey, should I buy now or buy later? The move up is very specifically, the language is different, the message that you're sending. It's all about talking to someone who's in a home who's looking to move up, where the cost of waiting could be a number of different folks. Josh, anything you want to add to that?
Just that I'm having a lot of conversations with clients that are saying, I've been thinking about moving up, but the market seems a little bit hot right now, so I'm just gonna wait it out. And how do you overcome that objective or that objection? And for me, it's data. In the email that Steve Harney sent you yesterday, Dave, he said, I've included some slides, but basically the bottom line is it's the home that you buy the fastest that's going to cost the least and cost you the least to finance, because prices and interest rates are going up, and he doesn't see, and I don't see anything that's going to reverse that in the near term. But if you just say that in a salesman spiel, it's not going to be real effective, because of course that's what you're supposed to say. You're a commissioned salesperson. But if you say, hey, I respect your decision, Dave. It's definitely a personal decision. Do you mind if I give you some more data, kind of some information that I look at that tells me the direction of where the market is going? And would you mind reviewing that? And maybe I'll follow up with you in a week or two and just get your thoughts. But again, if you've got the data from KCM, Keeping Current Matters, that you can use to offset that objection, I think that's powerful.
Got it. Well, let's go. We've kind of gone through the Bridge Builders information. And by the way, everybody, it is Bridge Builders. So while Steve Harney has a product that he provides to agents, what he provides to the lending industry, which just has a different voice, it's designed to help you be a leader to agents. It's Bridge Builders, and we did put a link in the handout. So Josh, let's just go through how you would deliver the different scenarios that you have. I know you sent me a rent versus own. You sent me a move up analysis. So I have those emails that I can pull up. Which one would you like to go through first?
Sure. Let's do the rent versus buy. That's great. The one you have up.
Okay. So let's go through that. I am actually going to pull up, and you go ahead and just start talking through it. But I'm actually going to have my mobile phone on and literally walk through a scenario. So if you wouldn't mind just kind of giving us some perspective on how you would explain it to a client and how you would walk through the process.
Yeah, well, this particular case study was an actual client that was referred to me by a realtor, and it was a friend of the realtor, and they weren't really sure which way they wanted to go. They weren't sure if they wanted to rent or they wanted to buy. They knew they had about a 5-year time horizon, and he was an engineer from Apple and very analytical, and he was a perfect person to do the rent versus buy analysis on. And we broke down the analysis. We showed what he was currently paying in rent. He also told me that if he didn't buy, he would likely be moving up to a more expensive place to rent. So I think if I remember right, he was going to move to a $3,500 a month rent. Oh, see, there it is. Yeah, I did a $2,600 rent versus buy analysis, and then I did a $3,500 a month rent versus buy analysis, because he thought if he didn't buy a house, he was going to move up to rent a nicer place in the next 6 months. And the analysis basically breaks down every data point that you could want. It breaks down not only what your monthly gross payment is on rent versus owning, but it also breaks down what your monthly net payment is when you own. So it nets out for you how much of that payment each month goes towards principal reduction, how much of that payment each month goes towards paying interest, which of course creates a tax deduction, and then at the end, what is your net payment as compared to your rental payments? In other words, the way we can explain that is, look, you're moving money from your right pocket to your left pocket, from your checking account to your savings account. You might have a monthly payment that's a little bit more. So in this illustration, you had a $3,500 rent versus a $4,200 mortgage payment. So you're paying a little bit more out of your checking account each month, but realize you've got tax advantages and principal reduction, and you have appreciation, which is putting more, AKA, in the bank savings account, if you will. And so this gives them all the data points to analyze that. In the bottom right-hand section of that analysis, I think one of the most important pieces of home ownership is what is the potential net worth of that home in 10 years, minus the mortgage. I don't think a lot of the younger buyers, and this gentleman, I say younger, he was probably late 20s, but first-time home buyer, I don't think they really think through the whole amortization. They don't think through the whole appreciation of the property, and they don't think through definitely the tax benefit. And when they sell that house, all of that money, unless tax law changes, is going to be tax-free. And how many years of savings would it take to accumulate that amount of wealth after you pay taxes on it? So that's the crux of the rent versus buy.
Okay, and let's go through your total cost analysis, this other strategy, if you could walk us through this.
Yeah. So this is a really common total cost analysis that we employ with folks, and this goes back to the rate sync. What I want to break with clients right up front is that the lowest rate equals the lowest cost. I want to get rid of that thought process right up front. And the easiest way that I've found to do that is to show examples of products that I wouldn't necessarily advise they go into. They might not even qualify for one of these products. But I want to show them that there is not a direct correlation to rate and to cost. And so we show them an FHA versus a borrower-paid mortgage insurance versus an lender-paid mortgage insurance. And, what I like to break down for them is, this person had a 5-year time horizon, by the way. So we've highlighted what is the cost of the 5-year first-year cost in each of these products, and what is your net worth going to look like if you just assume a 3% appreciation and the normal amortization of your loan? What kind of tax-free potential equity might you be moving in 5 years? This 5-year first lien cost, I think, is really powerful. And what I wanted to show them here, and what I'll pause in the video is say, is that notice, Dave, the lowest interest rate has a higher cost over the first 5 years than the highest interest rate program. And so when your friend tells you they got a 3.75 interest rate, you can laugh, because in your head you'll know that they likely had more overall costs in the first 5 years. And so the reason we put this together is so that you're more educated than most of the people in the market out there. I want to break that correlation between rate and cost as early as possible.
Got it. Love it. So, folks, if you do have questions for Josh, we will have time to get to some questions. Just post them in the questions. And by the way, we've got lots of questions, so I will get to those at some point. Do want to remind everybody, these slides we're trying to get posted. Let's see if we've got them posted yet. Not yet. We'll try to get them posted for you. And if they're not in here, we will have a link to them where we post the recording in YouTube. We'll have a link to at least one of Josh's total cost analysis. We'll have a link to these slides. So that will be posted, and you will have it either during the call or after the call. So Josh, let's do a little bit of scripting. I know you and I, we did create a video, by the way, everyone. So yesterday, knowing the challenge that everybody is having, everybody's getting rate shopped, Josh and I did record a video. So we've got a couple different videos, but this is the one, how to reduce rate shopping during the spring home buying season. So it's a great call by Josh. And the day before that, I actually recorded, how to reduce rate shopping with Michelle Malura with RPM, another amazing mortgage coach. She had a very different script. So I'm trying to create content for you guys. I mean, my goal is that every time a mortgage coach loan officer competes for a loan, mortgage coach loan officer wins. Every time a mortgage coach loan officer tries to get referrals from a realtor and build a relationship, the mortgage coach loan officer has a distinct advantage. But Josh, let's do this. Let's do a little bit of scripting on what you would say before delivering the move-up analysis to a home buyer. What are you going to say so that they're interested in that? And then I also want to make sure we nail it with the realtor. While I know this is a new strategy for you to take it to agents, I want to just kind of hear how you're going to approach the agent to get into that conversation. So let's start with the buyer.
Yeah, well, the first thing I'm going to do, especially this particular referral came from a realtor. So the first thing I'm going to do is I want to just get on the phone and ask as many questions as I can with that realtor so I understand their scenario going in. And then when I get on the phone with the client, my approach is going to be one as more of a teacher and an educator. And ultimately, my goal is not to push you to move sooner or later. My ultimate goal is to provide you with all of the data points and hopefully a different perspective, a different way to look at the possibilities. And by reviewing all of that information, hopefully you can make a more informed decision. But that's what I'm going to try and accomplish with the rent versus buy. And that's why I'm asking questions. What are you paying in rent now? What do you think you're going to pay in rent for the next couple of years? Alternatively, if you didn't buy, what would you do with that money that you have that you were going to use for a down payment? I want to gather as much of that information as possible so that I can make as relevant and as compelling a total a move-up analysis or rent versus buy, comparison as possible.
Got it. Okay. So then with that, like, what is the script sound like with the buyer so that when they get the total cost analysis, like they're excited about it. This is something they're going to click on and it's valuable.
Yeah, so you're saying before I send the total cost analysis?
Yeah, before you send them the link, this email right here. Let's literally script that because, I know this doesn't happen to you. There's a lot of mortgage coach loan officers that say, no, we hear it. Oh, no, they don't click on the link,
okay, got it.
And when I talk to people like you, I never hear that. I never hear that they don't click on the link and go through the experience. So if you could just kind of walk us through how that sounds.
Sure, yeah, thanks. We're constantly trying to improve that connection and trying to improve the conversion. We do a pretty good job. We don't have trouble getting people to click on the links, but that doesn't mean we haven't stopped trying to figure out different ways to do it. So recently we just implanted 2 different links next to our link to the TCA for people to click on and to download the app if they're on a mobile device. And you don't see it in that one you're looking at right now on the screen, but our newest we've included that. So that way, all they have to do is literally click on the app right there, and it takes it in to download the app. That's one thing that we do. The other thing that I do is as I'm going through my questions, I'm trying to build my information about the client. But when I get to the end of that question, my script is always the same. Dave, based on what I heard you say, I think we're going to have a great solution for you. We're at least going to be able to provide you with some really insightful information that's going to help you make a better decision. So with your permission, I'm going to send you a link to our client questionnaire. If you'll take just 5 to 10 minutes to complete our client questionnaire, we call our application a client questionnaire, then I will get for you what we call a total cost analysis. And the total cost analysis makes the decision on which mortgage to go with ridiculously simple. And the reason it makes it ridiculously simple is we're going to give you more information than anybody else. We're not only going to show you the rate, the closing cost, and the cash to close. We're going to show you the total cost of each loan over the 5 to 10 years that you told me you anticipated to be in the home. We're going to show you what your cumulative tax advantage might look like. We're going to show you what your potential equity in the property would look like. Remember, that's under current tax law, tax-free money that you're going to be able to potentially move in the future. And we're going to give you more data than anybody else. And so with your permission, I'll email you the client questionnaire now, and I'll have the total cost analysis back to you within 24 hours, and then we can reconvene and go over the data and make sure that you're seeing all the different finer, more small points that we can cover together.
Love it, love it. And then what percentage of the time do you add a video to the call or to the total cost analysis?
Always add a video unless my video recorder isn't working for some reason, and we always send a text message to follow up. So it's email to the client, here's the client questionnaire, send a text message. And we do that out of our CRM. I don't know that that matters. But just sent you the client questionnaire, looking forward to sending you the total cost analysis. Then they do the client questionnaire, then the client questionnaire comes in, we turn around, send them the total cost analysis, just sent you the total cost analysis, please review at your convenience and give me a call.
Love it. So guys, did you get it? There's great conversation, questions asked, a description of the total cost analysis. You know, it's not like, oh, I'm sending you a rate quote. It's going to have your monthly payment. It's going to show your cost and savings over time. You know, he's built, and again, it's not like minutes. It's like a minute. He's delivering a minute of value. And then he's giving a link. It's got a video. It's simple, it's easy, and it's powerful. And again, in today's market, when compression is happening, delivering your best advice to your client, it's essential to your success. So hopefully you guys are taking good notes. Remember, this call is recorded. We'll put it online. We'll make it available. So Josh, one more thing, and then we're going to open it up to the audience for questions. But what are you saying to agents? When you're trying to build a case, if refer to me, mortgage coach is a piece of it. What does the mortgage coach conversation sound like with the agent when you're describing it? Just give us a minute or two of scripting on that.
Well, the conversation that I've been having most recently with agents is probably our biggest strategy that we're leaning into for 2017, which is piggybacks off that slide of Harney's that showed the average time to close a loan is 50 some odd days and inventory is super low. So the conversation we're having with agents is, look, we're able to move almost as fast as a cash buyer. We're able to completely pre-qualify folks up front. We're able to educate them and teach them about the different loan programs so we make a decision on which direction they're going to go. We use Mortgage Coach to do that with the clients. And then once you go under contract, we can move to close and clear contingencies, typically within 10 to 14 days, and to close, most of our loans are closing within 21 days. So this is a conversation that I'm having with the buyer's agent, but I think even more impactful in 2017 is to be having these conversations with the listing agent. And when you tell the buyer's agent that you're willing to have that conversation with the listing agent and help them sell the deal, it's incredibly powerful. Incredibly powerful, and listing agents are very responsive. The script that I've been using with listing agents is, listen, you're going to get an offer on 123 Redwood, and it's coming from our client, Dr. Savage, and I just wanted to really quickly tell you what we've done to qualify them, and I'll run through the whole deal: income, credit, assets, all verified, been through pre-underwriting. They are checked out. We need to underwrite collateral, and we're ready to clear contingencies, and we'll get you to closing. And then I'll finish that script at the end of that, and I'll just say, hey, Dave, let me ask you one question. What is the number one factor, or what is the one thing that would make your sellers choose to work with our buyers in buying their new home? What is it that they really need to make this work for them? And it's crazy I mean, realtors don't expect that, especially listing agents, and they'll just tell you. They'll be like, well, to be honest with you, they need someone who's flexible in their closing time and they want to rent back. Or, well, to be honest with you, it's just all about price. Or, to be honest with you, they're making 2 mortgage payments. The husband just got diagnosed with pancreatic cancer. And, I mean, if they could close in 17 days, then for sure we'd go with you. But if you don't get on the phone and you're not calling and making that call to the listing agent, you never know that, and they just go with the cash offer. That's the strategy that we've pulled out of where the market is looking forward for 2017 that we're going to be employing the most.
Got it. So, breaking it down for Mortgage Coach members, Josh is delivering an amazing experience. So, the rate quote, the pre-qual is not just, an Excel spreadsheet. It's not an email. It's breaking down the numbers. It's mobile. It's got his picture. And so that's essential. And then it's speed. He's got a loan manufacturing system that works, and he's promoting it. He's talking about it, and it's really as simple as speed and experience. And then I would just add, because I've interviewed you so many times, Josh, you really know how to, ask questions, listen, and then tailor mortgage strategies that really are exactly what the family wants. And then you're very good at presenting this. Now, by the way, folks, Josh has created over 1,000 Mortgage Coach total cost analysis. So, he's in the 1,000 club. He's done this a lot. I would just urge everybody on this call, 2017, as a mortgage coach, you're on this call, you're listening to this video, it is the year for every single family that's buying a home that you're pre-qualing, they get the total cost analysis, not only because it is your best chance of converting them, but you're never really going to get great at it until you do it a lot. Josh, I can still remember that first call that we did when you went from, you've always been successful, but when you really embraced Mortgage Coach, you had to do it, north of 10 times before you even wanted to keep doing it. And now here you are at 1,000. So we've got 8 minutes left in the call. What do you tell, we've got, hundreds of people on this call. Hundreds, maybe even thousands are going to watch this video. What can we say to them to get them to actually not just kind of pick and choose, which family they give the total cost analysis? Any advice you have to say, hey guys, you got to give every family, every buyer a total cost analysis? First of all, why should they do that, Josh, in your words?
I think we're going to see growing competition from bigger banks. And the strong point where they have leverage is in rates. They can buy the market for as long as they want. And we have to think about where's our competitive advantage. Where can we bring value in other places? And you have to change the conversation from price to advice. You have to break in their mind. Try breaking in the mind of a client that 4.625 is better than 3.75 with a GFE or a fee worksheet. You can't do it. But on a TCA, you can do it, and you can film a super cool video, and you can teach somebody. And once you've taught somebody something, and by the way, it's not BS. It's true. And you're helping that family. And when you can teach somebody something that they didn't know before, you become a mentor. You become someone that gives advice, not just trying to sell them on something. And I don't think the big banks can compete with us there. I don't think they can compete with us in our nimbleness. I don't think they can compete with us in the way that we look after and take care of our clients. But we have to be educators, and there's no better way to do that than with a TCA.
Well, this is a call that you and I did together December of 2014, and it's not dated, by the way. This, while it's a couple years old, if you have not listened to this, if you're on this call and you're not giving every single family a total cost analysis, and you just want to, the basics of Mortgage Coach, go back and listen to this. I put a link to it, but it's called Going from Price to Advice with Josh Mettle. It's a great sales training video. It's an hour long. Folks, for any of you who's like, oh, that's a long time. I mean, our high school kids have an hour or two of homework every single day, and we're mortgage professionals. Put in an hour of homework. We've got all kinds of content to help you. Again, I've got a number of folks that don't know how to do a move-up analysis or a cost of waiting analysis. Come to our Thursday call every single Thursday. We are just answering any and all the questions that you have. I also want to make sure before we take a break on this call, next week I'm interviewing Chris Smith, and we're just, this guy is a legend in the real estate industry. If you talk to realtors, who's Chris Smith? He's got a book called The Conversion Code, I think it's called. He used to, kind of tell a story when he actually worked in the call center at Quicken. Anyways, he's a legend in the real estate industry. I've interviewed him. It was one of the most watched favorite interviews from last year, and I'm interviewing again, all about conversion. So don't miss next Tuesday on conversion. Don't miss next Wednesday with Dan Rawich about market insight. And then I'm closing out the month with Realtor Glenn Bill. Again, every single year I interview Realtor Glenn Bill out of Indiana, and this guy just rocks it. So we're here to bring education. We're here to add value. Josh, we got a little less than 4 minutes. And by the way, folks, you've put a lot of questions in. I'm not going to be able to get to all of them. If you do want these questions answered, I posted and promoted this call on Facebook. I will put a link to the recording on my personal page, my personal Facebook page. If you really want to get an answer to one of these questions, post it in comments, and either Josh will answer it or one of my teammates will get the answer and we'll answer those for you. So again, if you really want the answers to any of the questions that you posted that we haven't had time to get to, put those on my Facebook page in comments. So Josh, in the last 3 minutes of the call, any words of wisdom before we wrap it up?
Yeah, I think I'll go back to the way we opened, which is I would challenge each of us to look humbly at where we are in the last 60 days, not how we finished 2016. Are the same tactics that we're employing in 2016 working for us in 2017? And if they're not, or if you're slipping, or if your goals aren't quite if you're not quite lined up with where you wanted to be for your 2017 goals as we wrap up the first quarter, it's time to adapt. It's time to go for the gap and figure out where do we have a competitive advantage, how do we leverage Mortgage Coach, how do we listen better, how do we focus on the little details that makes us so much different than the loan officer at a big bank, and how do we drive value with our referral partners? Because I think there's a shift going on. I think it's just started. I think a lot of people are in a little bit of denial. The responses I was getting from my mortgage mastermind friends were, oh, I didn't want to say anything, but I'm really glad that we're talking about this. So analyze where you are, be humble, shoot for the gap, figure out how to give value to your clients and referral partners in 2017.
Love it. So, hey, before we wrap it, I want to know how many of you are actually having Mortgage Coach mobile conversations with your agents. I want to know how much we really need to educate and push this. So y'all know how I work. I would love to get 70% of you to vote. But where are you at? Is this a conversation you're having daily, weekly, monthly, like never? You're never pulling out your mobile app and talking with an agent and explaining a story or strategy to them? So if you could answer that question, I'm going to give it another second. Okay, this is helpful. By the way, thank you for all of you that voted. This is helpful. And, by the way, Josh, 10%-ish are daily, 34. So almost 40% of mortgage coaches are doing this weekly, 20% monthly, and, 38% never. So thank you. That'll be helpful as we craft content and training for future calls. And then last question before you leave, let us know what you thought of today's call. Did we surpass expectations with value? Was it a good call with takeaways? Did we miss your expectations? And then, of course, if you're new, you're a guest to this call, and you want to get a demo and know more about Mortgage Coach, click the last option. So, hey, Josh, thank you so much for coming on this call. Add value. Really appreciate it. By the way, Josh is on vacation, everyone, so he came in and added this value while he's on a family holiday, but really appreciate it, brother.
Happy to do it, man. I always learn something when I spend time with you, so thanks for the opportunity.
All right. Hey, everybody, have a fantastic week. We'll see you on one of the upcoming Mortgage Coach calls, and if you don't already, make sure you subscribe to our YouTube page so that you get alerts when our videos go up. Take care, everybody.